Hey guys, Marty with Options Unleashed. Another banking video, but this time options. Let's get into it. We've got futures down slightly tonight. We're going to get into some macro first a little bit, and then I'll get into my banking trades that I made today, give you guys some insight into a couple option strategies that you can play in the options market. I'll give you a hint, kind of a spoiler alert. It's a little contrarian. I'm like hoping for a little bit of a pullback later this week in the banks. It looks like, let's look at the macro first. Obviously the Qs are up big, 2.3% today. The Qs being the biggest winner on my macro list, followed by ARK. Obviously tech heavy ARK. A lot of these tech heavy names because the whole Powell, pivot, pause in play, dollar weakness. Good for tech, good for growth. XLF, banking, big banks up, IWM up, SPY up, trying to get back to that 50, still below the 50 and the 200-day moving average. I'm not going to get into a whole bunch of spider action and macro. Just wanted to cover the overall markets really quick. Before we get into it, we do need to talk about really why we're having this video. This on the banks is because I normally don't trade banks. Banks are boring. It's like airline, banks, beer, and what else? And gold, pretty much. Although gold's another story from their day, but those are things that are typically boring to trade. Let's take a look at the overview of what happened. By the way, guys, I have a Discord, Options Unleashed Discord. You can follow me on YouTube at Options Unleashed on this channel. And in my About bio, you can find my Discord channel. You can also find me on Twitter at Options Unleashed. And there's a Discord link in my bio. And join the community with us and talk about all things options. It's primarily for options traders. So trying to grow that Discord community. So yesterday we're kind of recovering from that, week over the weekend. We had Silicon, Valley Bank and Signature Bank and a couple others, but those two primarily, Silicon Valley Bank being the big one where, we're recovering from that. And basically got bailed out over the weekend with HSBC buying the bank. I'm pretty sure that was the company. Depositors will be made whole, and the FDIC, brokered a deal with the bank. So that was good. I think it's a one-time issue. This is related to just bad business decisions and bad actors, and it's pretty much fraud. If you follow Tom Sosnoff and Tony Batista on Tasty Trade, Tom did a good cherry bomb about it. It's pretty much an isolated incident, but when you have bonds that are, when you have the bond market going through this much variation, you're going to get, in this case, the 2-year, you can see what happened with the 2-year. When you have this much stuff going on, you're going to get some failures. But the point is that people are going overboard now. This is not because the Fed aggressively hiked, all year. Everybody was pissed off at the Fed for being behind the curve. Now they're, too far ahead of the curve and yada, yada. You're going to get failures. You're going to get, but it's not systemic in my opinion. And you know what, even if we do, it's probably better off that we expose some of this stuff, right? And we know that the Fed, easy money and all that stuff. I'm not protecting the Fed, but we know that the Fed caused this over the decade. It's not over the last year. Let's talk about what's going on though with the macro picture. We can't not get into this trade without talking about what's going on with the Fed. The next decision on the 22nd, there's now an overwhelming, an 80% chance that there's going to be a 25 basis point rate hike. Which was just a week ago, or, at 69% to do a 50 basis point, now 0. So the market is pretty much convinced, or, the banking industry is just convinced Powell at this point and others to pause, or just do 25 basis points. So that would previously was considered dovish, which is why, you would have expected the SPY to make a run for everything. So, when you get into it, the SPY is still below that 200-day, 50-day moving average. I'm still not, going to be bullish unless we can get above that 414.15 area, up above that 421. Then I would be extremely bullish. But I've been kind of option delta negative for all of 22 and also 23. I'm picking my battles, and I'm trying to just be fickle and sell premium, which we like to do, right, in the options market. So let's just get into some of the banking trades that I did this week. As you guys know, the banks have today just rallied hard. All of these in the green. Schwab up the most, 9%. Citibank, Wells Fargo, State Street, Capital One. You got your JP Morgans and your Goldmans. On your KRE, which is the regional index, everybody doing really well on the back of that bailout. If you take a look at the KRE, you can just see it got crushed in here. And so you got a bounce in here. Obviously, it came back and even tested that. Looks like it tested that gap, and we bounced. The JP Morgan came down way below the 200-day and then bounced. And you've got Schwab, probably the biggest of all, headline right now, up 9%, went down as low as that 44 number and bounced hard up to 56. So I felt like I missed a trade in here. And so what I wanted to do is, looking back at this over the next couple of days, was I wanted to take maybe a contrarian bet that the banks would probably just sell off over the next couple of days, kind of do one of these 50% retracements before going higher. So what I did was take a look at a couple of trades that I made. Yesterday, I made a trade in Goldman Sachs when the market was down big. Probably, let's see, by near the end of the day, I sold a strangle in Goldman Sachs. I sold the 31st of March, the 285 put and the 357 call. Now, the stock was down further, and I was able to collect that $3.10 on the put, and I only collected 90 cents on the call. We typically don't do that, but I first had sold the put, and then I sold the call into a little bit of strength. And I was really trying to keep the call side higher than normal because I was afraid that if we had that big snapback rally, then my whole string would be in jeopardy of profit. So I wanted to collect a good even $4 on this trade. So I did two contracts, which collects $800, or, $4 times 2 times 100. So $800 with an outlay of about, I believe it's 6,900 buying power reduction on that trade. So if you don't have that type of buying power reduction, there's another video I have on position sizing. Take a look at that one in my channel, and we talk about how you don't want to risk more than 1 to 3% of your portfolio in buying power reduction. So this is a sizable buying power reduction. Don't get me wrong. I was only expecting to be in this trade for a little bit. I was trying to take advantage of the vol crush in Goldman. The reason why I chose those strikes, and I'll just go through with you guys really quick how I do this. I'm looking first at earnings, right? So I say to myself, I want to be in a trade. Let me take a look at who is selling off, and I can sell into strength, meaning stocks are moving lower. Who can I take advantage of? Where can I sell premium into strength? I usually try to collect about $3 on a given put or a call into that down move or into that up move for every $3,000 of buying power reduction. That's what I'm looking for. I have a scan tool in Thinkorswim, and you can use Thinkorswim or Tastyworks, whatever tool that you want to use, but I have a scan tool that says, on the put side, give me 30 to 45 days of puts that are bidding between $3 and $6, on the sell side, and and I sort that by maximum, and then I take a look. And the other day I saw Goldman, and I said I had to jump on that. So that's why I sold that $3.10. put down in there. Obviously it's no longer $3.10, but and then you can see that I had vol crush already on the trade. So I'm looking to take that off at we take these off at about 50% of profits. If you watch the Tasty Trade Network with Tom and Tony, you'll learn these strategies. You'll learn that we sell option premium when IV rank is over a certain amount, like 50 or 60%, even lower sometimes for me. This IV rank is 70%, so it's got the vol juice that you need. The implied volatility rank is at 70 right now, which is extremely high. I wanted to make a trade that is before earnings. The earnings on 4/18, so I went out to the 31st of March, just keeping it within March. I wanted to make a trade, so there's that 285 that I sold for $3.10, and then I sold the 357.5 at 90 cents. So I've already collected some premium in there, but you could make the similar type of trade. So for that one, it's a strangle, expecting kind of a neutral trade, delta neutral on this. Don't want it to move at all. Want it to get another 100 points of theta there, and then just take it off our profit. Let's take a look at another trade. So that was Goldman Sachs. Let's take a look at, now I wanted to take a look at the KRE index, which is the S&P regional banking index of mid-sized banks. These were where the fallout happened, right? So the KRE basically just blew up. It broke all of the support. It broke all these trend lines. It broke this. It broke down through all of this stuff. And so, it tested this, it looks like it tested this gap in here, right in here, and then bounced hard. So what I'm kind of looking for in this trade is a little bit of a kind of a 50% retracement from that bounce level over the next couple of days. So it's a contrarian bet that the banks are not over. Maybe there's another shoe to drop. Maybe there's some bad news on the horizon. Maybe that people are acting too dovish on Powell. Maybe somebody in the Fed will come out and say, slow down, guys. This was a one-off. This was not something that the Fed is going to worry about. We're still worried about inflation. We're still a bit worried about wages. So, so let's get into the KRE trade that I made. Was a Jade Lizard. And I'll go over the trade in a minute. I've already kind of repositioned it a little bit. I had sold I sold the 46.47 call spread and then the 39 puts to make a Jade Lizard for about $1.10, I believe. And then what I did was I ended up covering that trade today from the vol crush. I made about $300 on the trade, about a third of the profits, and then I just put the trade back on again today. So I ended up selling the 47.48 call spread, and then I sold the 43 puts. And this is a Jade Lizard. If you don't trade Jade Lizards, I'm not going to go into too much detail, but the quick version of the Jade Lizard is you're selling a near at the money call spread, and then you're selling a put that's around a 16 delta put to give you that kind of neutral to bearish. It's pretty much a bearish. It's a short-term bearish to neutral trade where you don't want it to blow out your 16 delta on the downside. In this case, I had 3 days to cover. Now these option prices are going to be, it's after hours, they're going to be a little bit different. But what you would do to do a Jade Lizard is you would sell the at the money call spread. So in this case, the 17th of March 45 strike for 205. Then you would buy protection, the $1.75, the 46 call. That would be your 75 cents credit for that call spread. Again, the numbers are different in the morning. It's not going to be like this, but just giving you an example of how it works. And then you would sell maybe the 16 delta, in this case, maybe the 40s, right, to round it out, and it would give you that $1.26 credit for this particular Jade Lizard. Again, numbers are wrong, but you get the idea that you have zero or some positive profit to the upside, but typically you try to do it for at least a zero credit to the upside, but you're getting a lot of juice to the downside. You're capitalizing on that call spread, which are also capitalizing more or equally amount, at least some percentage of that, probably 50% or 100% of that is going to be from the selling the put down at that 16 delta. So you're getting good protection. You're getting a 16 delta trade. And it's actually good for quick wins, kind of a delta neutral bearish strategy. If you start to blow out down on the put side, it's kind of almost similar to a strangle in that you need to protect, you need to go into protection mode. So you can't sell these puts too close to your credit spread strikes. You need to really go out 16 delta, at least try to even go out further from that. So in this case, like for instance, this is hypothetical because the numbers aren't right, but if you were to have that $1.26 credit, just to give yourself a little bit more probability of profit, you could take that 40 and actually get it down to a 38, the 38 put or even 36 put, and you would probably want to get it to the point where you're getting zero profit to the upside. This gives you more risk, more probability of profit. So because your lower put strike is lower, giving you more room to the downside, but you're also getting zero risk to the upside. So you're not trying to collect a lot of money to the upside, unless in case you actually wanted to and you actually felt like taking that risk, then you can certainly put on the 40. But now you're got a little bit more exposure to the downside. And don't forget, as the stock starts to fall, you've got this negative vega going on in here that's going to hurt you as the stock falls. Your vega is starting to push you lower, which means you need volatility, and you need that volatility to collapse for you to get back to being positive in the trade. So just something to be aware of is that vega can eat you up in a jade lizard, just like a strangle, just like an iron condor. But in these particular instances, the vega can eat you up a little bit faster, in my opinion. So you got to be careful. All right, that's enough on the jade lizard. Let's take a look at the last trade I made, and I think it was Schwab, SCHW. Let's take a look at the Schwab. Let's take a look first at the chart, if you will. All right, everybody's in love with Schwab all of a sudden, and Schwab, bought TD Ameritrade. I think it was in 2020. So they own Thinkorswim now, and they're a huge brokerage firm, right? And then you had some consolidation in the banking industry. You had Morgan Stanley bought E-Trade, right? So there is the consolidation of brokers, but there was some Schwab had some exposure to to venture and loans and startups and things like that, obviously, because they have a book. They have a lot of stuff on their books, but it was overdone. And so we missed this rally, though. So I'm thinking the same thing with Schwab. Contrarian play. I could be wrong. If I'm wrong, I can tell you what happens if I'm wrong in a little bit. I've still got an upside move, planned here, but I wanted to take advantage of a quick contrarian trade for the rest of the week. I just sold the Jade Lizard. I sold the 56-57 call spread with a less, I doubled down for less on the 51 puts, if you will. So I'm taking a little bit of loss even to the upside, just because I wanted to reduce my buying power reduction on that trade. So the Schwab trade is a $4,500 buying power reduction, but look at the juice I get for the $4,500. I can get a $900 profit in 3 days if I get, and it went against me today. But when I made the trade, it was trading at around probably 55. But now I need at least 3 points for me to get this gamma. I can get gamma by the end of the week. I get that gamma to the downside, and I'll be quickly profitable in this trade, but I do nothing in the meantime. So let's say we get the banks to run. If the banks want to run and they pull everything up by Friday, or even into next week, what are we thinking? We're thinking if the market is done with this and now we're all of a sudden bullish Powell and everybody's happy, I was thinking we're going to at least test this 50 to 200 day moving average before we either come back or go higher. So this is like what I'm looking at of next week is there's a possibility that we can be somewhere in this level, at least this level. And if we really get a lot of buying, we can be at least test at 404 next week easily. We can also, start to pull back and we can easily break this level by the end of the week, or at least retest that level. So there's your risk ranges, at least for me, what I'm looking at for the rest of the week and into next week. If the banks pull back with the market, I profit on hopefully all three. Goldman, but by the way, I can take them off at any time. So even if we get a whoosh down tomorrow, the Jade Lizards are going to hurt me. They're going to be negative, but the Goldman will be fine. And then, so what I'm hoping for is just a gradual maybe decline in the banks and some selling. But if we get the pop higher and everybody just goes ballistic tomorrow morning on the open, so I have zero risk to the upside, but I did put on a trade on the spiders, because I always have a trade now, at least this time of year, with zero DTE options and that craze. And I'll probably do another video on why I think zero DTE options are really stupid. Leave me a comment if what you think of zero DTE options. But I trade them a little differently. I trade weeklies and I trade a lot of diagonals, and I also trade the UVXY. I made a killing on the UVXY the last couple days on that down move. And I actually took it off early. I took it off at like a 25% profit. And now I actually went the other way. I'm looking for the UVX to drop and the VIX to drop. So those are the trades I like to make. This is a diagonal saying that, you know what, I'm going to risk $400 to make an average of $1,600 in here. Half the profit here is about $1,600. Let's say if the S&P can get to 400 by the end of next week, I think this is a great trade just as a kind of a hedge against things, because I'm mostly delta negative, usually been delta negative in my portfolio. And if you look right now, I'm actually delta positive. Recently I put on, like, the SPY trade has given me that. If you take a look and you sort, and by the way, I recommend everybody kind of put these columns in your trading platform. If you're trading options, either in Thinkorswim or Tastyworks, you're going to be looking at delta. But recently, probably for the past 6 months now, I've started looking at my gamma and my theta. And then you also want to make sure you're beta weighting against the SPY or QQQ or whatever you feel you're beta weighting. You need to look at your total option beta weighting value for delta. You need to make sure that if you're trading options, you need to have you need to be conscious. Let's put it that way. At the end of the day, if you're a good option trader or a good trader in general, every trade that you make will give you a better opportunity for success. Otherwise, why would you want to put that trade on? So we have to get to that level. When Goldman was down big the other day, down in here at 315, I put this trade on, and Goldman could have dropped another 10 points easily into the close. But I was convicted to sell that put at $3.10. And then I just rounded out the call for 90 cents because I didn't want to be too close here in case we got a huge bounce. Like Goldman's down huge. So it can easily bounce back to 337, right? Easily and higher. And this is out to 31st of March. I got 17 days for this thing to manage it. So I went out to the 357 call, right? Giving myself plenty of opportunity for success. So by April 1st, I've got right now a 83% chance of success. So I'm totally happy with that. I've got more than a one standard deviation, or about a one standard deviation move protection in this trade, and I'm already close to 50% profit. So in this case, this was a vol crush move, right? which we try to play. And then Goldman still has that IV rank of 70, so you can actually take this off and do it again. So I'm sure a lot of traders are doing that. And then we've got earnings coming up. So the closer you get to earnings on that 418, you got to be careful because you don't want to be past. You got 418 is your earnings. So you've got another 31 days to the 14th. So you can easily get out here if you guys are bullish. Or not bullish, but if you're convicted like I am and you want to trade that strangle, if you think Goldman's not going to do much between now and earnings, you can trade that 16 delta, or as I like to do, I go out to the 85% or even 90% out of the money. You can sell this you can sell the 270 for $1.54, and then you can come back up here and look at that same 90% out of the money 11 delta for $1.25 and make that a $3.10 strangle. And now that strangle is going to cost you about $3,000 in buying power reduction. And what I was telling you earlier is I look to make $3 for every 3,000 in buying power reduction. It's like a 1 to 10 ratio. This is a great trade. I'll make this trade all day long. So hopefully you guys like the video. I was going to go over some other trades on here, but this was mostly about banks. And let me know, drop me a line in the comments. Let me know what you think I ought to cover in terms of options. Let me know if you like this style, this format. Please follow me on my Discord. You can find my Discord through Twitter at Options Unleashed, my bio. You can find me on YouTube, obviously through this channel. And I have other one-on-one videos, and I'd like to do, this was more of a current events video, but I'll be doing other videos on how I trade options. Why do we use 16 deltas? What are different strategies? How I play earnings events, how to get protection with options, and different types of videos. But drop me a line. Let me know what you guys think, and let me know what actionable trades you guys like in the banking environment right now, and tell me what you're doing with that. So have a good evening, and I'll see you on the next video.